I'm going to call this episode Why the Non-Bitcoin Portfolio Does Not Work. Okay, so what do I mean by this? I think, Saylor had this saying that, the people, we have a word for the people who put their money in cash. We call them poor. But, it is the case that most people that I know who have wealth of any kind don't really store their wealth in cash. Very few people store their wealth in cash once they've made any kind of money at all. They buy real estate, they buy stocks, eventually they make private investments. So inflation does not rob you in a very simple way. It doesn't rob you just because you have this pile of cash and your cash is going down. That is not what happens. That is not the risk of inflation. That's not accurate. It's not like you make all this money and it just becomes less. It's much different. So what happens is inflation is raising the cost of all things, but it's also raising the cost of all assets. And the harder the assets, the higher the price goes up. Now, if you're looking at something like real estate or stocks, you can get over time something like 6-7% per year. There's going to be up years and down years, but overall you can get 6-7% per year. Unfortunately, the real cost of inflation is somewhere like that, 6-7% per year. Again, right now it's lower, it's like 3%, but it was quite a bit higher in 2020. And I think, the trend line is that, if you look at bigger periods, like over the last 20 years, et cetera, and you really look at the inflation that kind of matters to most people, not government calculated inflation, you'll find that, 7% is probably an accurate number for what middle class inflation is like. So the problem you have is that if you put your money in an asset like stocks or real estate and you turn over that, well, you're going to be hit with capital gains, right? That's your best case. And, capital gains, you got 20% federal tax on capital gains. You live in California, you got another 10 to 13%, depending on the year, but say another 13%. So you basically have a third of that's going to pay taxes. Now, what if you're putting your money in ordinary income, you're trading very frequently like Josh Mandel, well, you're going to take half of your gains are going to be taxed. It's just going to go direct to the government. So basically, even in a situation where you're basically catching up with this inflation through investing, well, you're not really catching up with it because all the gains periodically are taxed. Many of the times you're going to flip something, you're going to move houses. You're not going to qualify for the you're not going to qualify for the capital gains. It's going to go ordinary income. And you're going to get screwed, right? And so that's fundamentally the problem with this fiat system.
This week's headlines have been buzzing with an electrifying forecast from Bitwise CEO Hunter Horsley, alongside expert Fred Krueger, who envisioned Bitcoin soaring to a staggering $1 million. This comes as Bitcoin garners serious attention from corporate titans and state actors, while the meme coin frenzy, characterized by quick profit schemes, is challenging its dominance. With political figures like Donald Trump entering the blockchain scene through these high-risk tokens, the debate intensifies over their sustainability. Welcome back, everyone, to Investocracy Crypto.
You really can only sort of fight it by buying these hard assets. But even if you do, unless these assets are incredibly spectacular, like you find the next Facebook or something like that, you're not going to going to make it, right? Your assets are going to get taxed away. So I think that's the crux of what that we as Bitcoiners we realize. We realize that this is not a good situation, and Bitcoin is exceptional. It has much, much higher compounded annual growth rates than stocks or real estate. So stocks or real estate, you're looking at that sort of 7% range. Bitcoin right now, today, you're getting 40% compounded annual growth rate. So, that's not going to help you out if you're just starting in life and you have a couple $1,000. It's not really going to make a difference. But if you've accumulated 100 grand or more, and you're starting to now compound out that interest, I think that's really when, Bitcoin is exceptionally great. And so, I think that's a mind shift, because we don't need any law to tell us that Bitcoin's adopted or it's legal tender or anything like that. We can go out right now, all of us, and we can buy Bitcoin, right? So I think it's just a mind shift that that's the way you should invest, and not to follow the 60-40 portfolio, which in this kind of market is going to, you're not going to keep up. You're not going to keep up. You're not going to keep up with the cost of inflation. You will not, if you're a young millennial, you will never be able to buy that house. You won't ever be able to upgrade your house from the crappy starter home that you first bought to something a little better for you and your family. You really got to take a bet on Bitcoin. I think it's the only way out of this situation.
As Bitcoin's value proposition evolves, institutional and retail interests find themselves at a crossroads. The disparity between Bitcoin's measured ascent and the whirlwind activity around meme coins paints a vivid picture of the current market landscape, with figures like Avishal of Electric Capital highlighting the meme coin's allure and eventual downfall, akin to a digital financial epiphany. The popularity of meme coins, often launched with just a $2 transaction, mirrors the dichotomy in trading models.
Hey guys, it is Saturday, February 8th. Bitcoin's been selling off. We're at around 96,000. And it doesn't matter though. And this episode is going to be called, We Don't Need a Bitcoin Standard, We Need Bitcoin. So what do I mean by that? Well, I'll tell you in a second, because first of all, I want you to go and sign up to my YouTube account. I need more YouTube followers. And then you can also, you can also follow me on Twitter if you don't already. That help me out on Kreuger on X. So what do I mean by this? Well, there's a really great video that was circulating today about a comedian, Dave Smith, talking about, really why almost all the big problems in the world today are due to money printing. Dave's argument is that we wouldn't have wars if people would actually have to pay for these wars. We wouldn't have had the COVID lockdowns if people actually had to pay for the COVID lockdowns. We wouldn't have all these things with USAID if people actually had to pay for these things. But the reality is, when you can just print money to solve your problems, it's very invisible. People don't feel the pain, and they don't have to agree to it, and governments can get away with it. And that's really been the case for the last 100 years, right? Really since 1971 in particular, but even before that, right? And Dave makes this point that the gold standard, when you get it to a gold standard, well, you can always get off the gold standard, right? So you can say, well, right now we have a war to fight. We have World War II. So we're gonna stop this gold standard that we have, or World War I, and we're gonna stop the gold standard. We're just gonna print money because we have to fight it. We have to win the war, right?
Meme coins provide tempting gateways into crypto for many, but often yield hard lessons in financial losses. And while the meme coin sensationalism gathers momentum, regulators in the US are playing catch-up. The scrutiny over platforms like Pump.Fun, known for enabling rapid token launches, is in full swing. Congress faces the challenge of determining if these creations fit within securities law. Meanwhile, Bitcoin's integration into more traditional finance systems gains traction, buoyed by regulatory clarity and institutional participation reminiscent of past adoption cycles. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And that's really been going on really since the Civil War, right? So in the Civil War, that's really when they started this concept of greenbacks. And they sort of said, well, we got this new money. It's the US dollar. It's not backed by anything. We're not redeeming it for gold. But you guys have to accept it. And maybe it'll be redeemable in the future. And actually, 5 years after the Civil War, they did start redeeming it again. They said, no, we're kind of going back to a gold standard. So my worry is that, people are going to start, they're going to sort of slowly transition to, we have a Bitcoin standard, right? And, the government holds X amount of Bitcoin and the dollar is redeemable for Bitcoin at such and such a rate until it's not, right? Until we say, yeah, we actually are fighting a war with China now and we can't redeem those dollars for Bitcoin anymore. So, at the end of the day, Bitcoin solves this directly. You don't need a second currency that's backed by Bitcoin. We can just use Bitcoin. And that's really the power of Bitcoin. That's what separates it from gold. Because gold can't really be used very, very efficiently to back anything. It takes literally a month right now to get your gold out of the Bank of England. So it's not efficient to move gold in and out of these vaults. It doesn't work. But to move Bitcoin, it's 10 minutes. So, that's the major difference between gold and Bitcoin. And that's why I think the word standard is kind of dangerous. Whenever you say, I'm going on a standard, well, that means you can go off the standard. But if you actually hold Bitcoin, either you hold the coins or you don't. You can verify that you hold the coins or you don't.
In the grand showdown between enduring value and fleeting allure, Bitcoin emerges with a robustness that promises to outshine the ephemeral nature of meme coins. As Horsley asserts, the future of cryptocurrencies is indeed bright, and with rise in institutional endorsements and improved technological frameworks, Bitcoin's trajectory appears set for new horizons. But what do you think? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.